That's President Biden assuring the nation that despite recent economic stresses, the country is not in the midst of a recession.
In terms of what we're seeing in the data, whether it is the GDP number, whether it is the jobless claims number, this is an economy that's weakening at a much faster rate than most people expected. That's the bottom line. Whether we're in a recession or not is not as interesting as the fact that we are weakening really fast.
GDP contracting doesn't come as a great surprise to anyone. We've seen evidence on a daily basis that there are parts of the economy that continue to struggle. And again, part of that is the business cycle, and part of that is interest rates going higher. Now after US GDP shrinks in the second quarter, is the nation in recession? To answer all your doubts, this video will take a close look at the data to see what's really going on and what this might mean for the future. So stay tuned to hear Chamath Palihapitia's take on this year-over-year comparison. And if you're new to the channel, be sure to subscribe for more videos on economy and market.
People are really fixated on these numbers without understanding basic statistics. So just taking a step back, if you go to the Bureau of Economic Analysis, which is an official website of the government of the United States that posts GDP, the title makes it pretty self-obvious what we're dealing with here, which it says, Nick, you can put it up there. Real GDP, the percent change from the preceding quarter. So things can still go up positively, but still be negative if it doesn't go up by the same or more than the quarter before it. The thing that we really have going on is that over the last 8 quarters, we've had all kinds of very turbulent data that's made the trend line unpredictable. And the most obvious way to see this is actually in one specific subsector, which we'll get to in a second, which is around US e-commerce adoption. You see this one huge spike coming out of nowhere. And then eventually everything has settled back to trend. The same way, I think what we're waiting to figure out is how many quarters does it take for us to get back to on-trend growth in the economy. We had a massive shortfall in Q2 of 2020. We had a massive surplus in Q3 of 2020. We've had a country that's been getting back to finding equilibrium over the last 5 quarters. So we don't really know what the steady state growth should be. This is why I specifically had such an issue with the tone the White House took, which was trying to explain away that this isn't a recession by trying to create doubt in the definition. Instead, I think it would have been much better off just repeating what I just said and explaining basic statistics and actually showing that the country is headed in the right direction, largely speaking, from a really crazy one-time externality that nobody could have predicted, that it's going to take some number of quarters. And so really what you should look at, and Jason, you've pointed to this, is employment and wages, and try to be a little bit more circumspect in overreacting to any one quarter of data. By the way, the Fed exactly just said the same thing yesterday when they raised 75 basis points. They said, we are not going to give guidance anymore because things are too turbulent. We're going to remain vigilant on inflation, but mostly we're going to be very near-term data dependent. So I would boil all of this in saying, let's not overreact to a quarter's print here or there, and specifically the label. I think the White House made a mistake in trying to basically think, we all didn't understand what a technical recession was. I think instead we should just focus on what we have to do to get back to solid state equilibrium.
The U.S. is teetering on the brink of recession as GDP contracts in the second quarter this year. GDP fell at 0.9% annualized rate last year, marking 2 straight quarters of negative growth. The U.S. economy started contracting in the first quarter of 2020 as the country grappled with the coronavirus pandemic. Since then, we've all been trying to find equilibrium, which seems like a long catch. Now, the news comes as no surprise to many economists who have been warning of an impending recession for months, and it's likely to get worse before it gets better. Let's see what the Federal Reserve has to say on the economy and recession.
We're trying to do just the right amount, right? We're not trying to have a recession, and we don't think we have to. We think that there's a path for us to be able to bring inflation down while sustaining a strong labor market. As I mentioned, along with, in all likelihood, some softening in labor market conditions. So that's what we're trying to achieve, and we continue to think that there's a path to that. We know that the path has clearly narrowed, really based on events that are outside of our control, and it may narrow further. I do think, as I said just now, that Restoring price stability is just something that we have to do. There isn't an option to fail to do that, because that is the thing that enables you to have a strong labor market over time. Without restoring price stability, you won't be able to, over the medium and longer term, to actually have a sustained period of very strong labor market conditions. So, of course, we serve both sides of the dual mandate, but we actually see them as well aligned on this.
Things are too turbulent. The Fed is going to remain vigilant on inflation and is going to focus on near-term data for a more stable economy. Now, after the second quarter advance estimates came out, with the result of 0.9 down, it normally indicates recession is officially here. But we can't really be in a recession if we change the definition, right? The recession debate is so intense lately that Wikipedia has blocked new users from editing its recession page because people keep changing the definition. Some define it as 2 consecutive quarters of negative GDP growth, while NBER rejects the outdated definition of recession. According to them, what defines recession is a significant decline in economic activity that is spread across the economy and lasts more than a few months. So, NBER won't declare that the economy is officially in a recession. If you find this video informative, don't forget to like and share.
Chairman Powell and many of the significant banking personnel and economists say we're not in a recession. We've created 9 million new jobs so far, just since I became president. Businesses are investing in America at record rates. Foreign business like SK and others are investing in America. Hundreds of millions and trillions of dollars, sum total. That doesn't sound like a recession to me.
Biden seems optimistic, despite the economy contracting for 2 quarters in a row. That doesn't sound like a recession to me, Biden told reporters. So we no longer know what a recession really is. Everyone's trying to muddy the water on the definition of recession. But I believe we are already in a recession, maybe a shallow one. And we might have a bounce back in quarter 3. Or this might be a more double dip due to inflation. But the point is that the recession has started. What do you think? Let me know in the comments below. Let's hear what else Chamath has to say on this matter. But before going ahead, be sure to give a big thumbs up.
Because of loose financial conditions, distort what true supply and demand should be.
Got it.
Right? And excess money can come from the government. But in this case, excess government money went from the government into the hands of individuals who then participated in the public markets, and they distorted what it all looked like. And so there was a lot of purchasing activity that was propped up by what seemed like an endless supply of free money.
Right. So when we look at yeah, good.
And so now that money is getting taken out, we don't yet know what the real equilibrium economic growth rate should be, because you have to remember, we have not seen an era without federally introduced spending, without federally introduced forms of quantitative easing since the great financial crisis. So we have been propping up our economy for 14 years straight now. So we have distorted the prices of bonds and fixed income. We've distorted the prices of equities. We've created an asset bubble in crypto out of nowhere. And now we have to do the hard work of figuring out what the real supply demand is in the economy.
Chamath believes that we have distorted the prices of everything and have created an asset bubble in crypto. All of this has put us on the path to financial ruin. Now, to conclude today's video, the main question after the US economy's second consecutive contraction is, does it mark a recession? How many quarters does it take for us to go back to on-trend growth in the economy? Let me know your thoughts in the comments below, and don't forget to subscribe, like, and share. Also hit that bell icon to never miss out on any of our latest updates. Adios!